Imagine a stack of $100 bills reaching from Earth to the moon. Now multiply that by 800. That's $315 trillion, the current global debt. This astronomical sum is not just a number on a spreadsheet. It's a ticking time bomb affecting every nation, community, and individual. But how did we get here? The global debt crisis didn't happen overnight. It's been brewing for decades. Governments borrowing to fund wars, bailouts, and social programs. Companies taking on debt to expand. Individuals using credit cards and mortgages to finance their lifestyles. The implications of this debt are far-reaching. It affects everything from international relations to the price of your morning coffee. Understanding this crisis is crucial for anyone who wants to make sense of our interconnected world. As we delve deeper, we'll explore what this debt means for different countries and individuals. We'll look at potential solutions and future projections. Most importantly, we'll discuss what you can do to stay informed and protect yourself in this debt-laden world. Buckle up, because this journey through the global debt landscape promises to be an eye-opening ride. Global debt is more than just a big number. It's a complex web of financial obligations that spans countries, corporations, and individuals. Economist. For starters, it's a key indicator of economic health. A certain level of debt can be good for an economy. It allows governments to invest in infrastructure and social programs. It enables companies to expand and create jobs. It lets individuals buy homes and cars. However, when debt levels become too high, it can lead to financial instability. High debt levels can make countries, companies, and individuals more vulnerable to economic shocks. When a significant portion of income goes towards servicing debt, there's less money available for other important things. For countries, this could mean less spending on education or healthcare. For companies, it could mean less investment in research and development. For individuals, it could mean less savings for retirement. Understanding global debt is crucial in today's interconnected world. What happens in one country can have ripple effects across the globe. The 2008 financial crisis, which started with the U.S. housing market, quickly spread to become a global economic meltdown. As we face a $315 trillion debt mountain, the potential for such global crises looms larger than ever. That's why it's important for everyone, not just economists and policymakers, to have a basic understanding of global debt and its implications. When we talk about global debt, not all countries are equally indebted. Some nations carry a heavier burden. The United States has the largest national debt, over $30 trillion. Japan's debt-to-GDP ratio is over 250%. China's debt levels have risen dramatically. African nations like Zambia and Ghana struggle with debt crises. Reasons for high national debt vary. The consequences can be severe. High debt levels may deter foreign investment. They may face higher interest rates. In extreme cases, countries may default, causing chaos. Understanding global debt is crucial for predicting economic turbulence. You might be thinking, sure, $315 trillion is a lot of money, but how does it affect me? The truth is, global debt has a very real impact on your daily life, even if you don't realize it. Financial analysts, high global debt levels can lead to economic instability. This can result in job losses, reduced wages, and fewer opportunities for career advancement. Remember the 2008 financial crisis? Millions of people lost their jobs and homes due to a crisis that started in the debt markets. Global debt also affects the prices of goods and services you buy every day. When countries are heavily indebted, they may resort to measures like currency devaluation to manage their debt. This can lead to inflation, making everything from groceries to gasoline more expensive. Moreover, high debt levels can impact government services. When a significant portion of a country's budget goes towards servicing debt, there's less money available for things like healthcare, education, and infrastructure. As we grapple with this $315 trillion debt mountain, it's crucial to understand that its effects reach far beyond the halls of power and financial institutions. They touch every aspect of our lives, from our wallets to our communities. The $315 trillion global debt isn't just a collection of individual country debts. It's an interconnected web that can trigger a domino effect across the world economy.
When one major economy struggles with its debt, it can send shockwaves through the global financial system. This interconnectedness is both a strength and a vulnerability of our modern global economy. Consider the example of the European debt crisis. What started as a problem in Greece quickly spread to other European countries like Ireland, Portugal, and Spain. It threatened the stability of the entire Eurozone and had repercussions far beyond Europe's borders.
High global debt levels also affect international trade and investment. When countries are heavily indebted, they may implement protectionist policies to try to boost their economies. This can lead to trade tensions and even trade wars.
Furthermore, high global debt can exacerbate income inequality both within and between countries. Wealthy individuals and corporations often benefit from the low interest rates that accompany high debt levels, while ordinary citizens may face stagnant wages and reduced social services.
As we navigate this $315 trillion debt landscape, it's crucial to understand these complex global implications and their potential to reshape the world economy. Addressing a $315 trillion global debt crisis is no small feat. It requires coordinated efforts from governments, international organizations, and the private sector.
One potential solution is debt restructuring. This involves renegotiating the terms of debt to make it more manageable for the debtor. The IMF and World Bank often play key roles in these processes. Another approach is fiscal consolidation. Governments reduce spending and increase revenues to control debt. This can be effective but politically challenging. Austerity measures can be unpopular and may slow economic growth.
Some economists advocate for more radical solutions. Modern monetary theory suggests countries controlling their currency don't need to worry about debt. This theory remains controversial among mainstream economists. Others propose wealth taxes to address debt and inequality.
International cooperation is crucial. Initiatives like the G20's Debt Service Suspension Initiative have provided some relief. More comprehensive and long-term solutions are needed.
There's no one-size-fits-all solution. A combination of strategies tailored to each country's unique circumstances will be necessary. Predicting global debt is challenging, but economists make projections based on trends and scenarios.
The IMF warns that global debt will remain high post-COVID-19, with many countries taking on additional debt. Rising debt levels could lead to financial instability and potential debt crises.
Policy decisions and technological advancements will shape the future of global debt. Staying informed and engaged is crucial for navigating the future of global debt. What can I do about a $315 trillion global debt crisis? Your actions and choices matter. Stay informed and engaged. Educate yourself about economic issues. Read reputable news sources and follow experts. Your voice shapes economic policies. Vote and engage with representatives. Manage your finances responsibly. Save, invest wisely, and avoid unnecessary debt. Support financial literacy programs and local businesses. Think globally. Act locally. Be open to innovative solutions. Global change starts with individual actions. Stay informed, engaged, and be part of the solution. Let's build a stable global economy.